Hey everyone, John Henry here from School of Trade, and today we're going to be talking about contract rollover. So contract rollover specifically applies to the futures market. It doesn't apply to CFDs, Forex, stocks, none of those. And it's simply the date at which the current futures contract month expires and the next futures contract month becomes active. So futures contracts are really different. They're very different than other asset classes that you can trade just because futures contracts are intended to be short-term instruments that are used for hedging. That's kind of their main purpose. Remember, futures markets were created to help people hedge against rising or falling prices in the future. That's why they're called futures markets. As an example, let's say a corn farmer wants to hedge against falling prices of corn in the time that it takes for him to go to harvest. So if the corn farmer sells a corn futures contract, then he'll protect himself against the falling prices of physical corn between today and the date that he wants to go and harvest the corn growing in the field. Now, if the price of the corn drops between now and the harvest date, the farmer will lose money on the physical corn when he harvests and sells it. However, the farmer will profit from his short position in corn futures, thus essentially hedging himself against the loss if the price of corn drops between now and the time of harvest. So with that said, every futures market has a sequence of contract months that you'll use to trade. Every futures market has a scheduled date for which the current contract is set to expire, which is called contract expiration. And at that time, we must exit all of our positions on the expiring contract and re-enter the new position on the next contract in the sequence. This is called contract rollover, which is basically the act of exiting a position on the current contract month, then re-entering the same position on the next contract month in the sequence, if you're looking to hold over several periods of contract months. The common contract rollover dates are as follows. So crude oil futures roll over the third week of every 1 month, meaning they roll over monthly. So January, February, March, all 12 months all the way across the board. Gold futures, on the other hand, are the third week of every 2 months, so bi-monthly, meaning February, April, June, August, October, and December, so every 2 months. Now, E-mini futures, like the Russell and the Dow and all of those, as well as currency futures, they operate the same, is going to be the third week of every 3 months, so every quarter, meaning March, June, September, and December, those 4 months. So let's take an example of trading crude oil futures. Crude oil contracts expire every month, which means that if I'm trading the January 2014 contract, I'll need to roll over to the February 14 contract the third week of the month of January before the January contract expires. Well, looking at it, is there a risk of, say, not rolling over? Well, yeah, no, kind of. Your futures broker is always going to monitor your open positions as you get closer to the expiration day, and most often your broker is going to contact you and remind you to basically say, hey, you've got a position that you're holding that's going to be rolling over to the next contract month in the sequence fairly soon. Yeah, if you don't do anything, you will have to take quote-unquote delivery of this commodity, but 99.99% of brokers are going to prevent this from happening unless you specifically tell them not to. And that's just because most people don't actually want 1,000 barrels of crude oil in their front yard. So the steps to take the contract rollover. The first thing you want to do is identify the contract that you want to roll over. Now, you want to do that by opening NinjaTrader, getting your charts loaded up, and connecting to the live market. And then from there, what you want to do is open the instrument manager and activate the next contract month in the sequence for that market. So what we can do is we'll open up the control center. And let's say we want to go into tools and then instrument manager. And let's just say we have an outdated crude oil. So what I'll do is I'll take this one off and I'll just add an outdated crude oil here. And we'll just do last month's, the 314 contract. Now, looking at this 314 contract, we know that this contract is going out of date. And what we want to do is update to the 414 contract. The 314 is going to no longer be traded. So what we can do is just take the old one off. I'll take this one off just as the example. And then what we can do is do a search for crude oil, pull it up, and we can hit the left arrow, and that will add the updated 414 contract right onto the list. Then what you want to do is, after you've got that rolled over, you want to choose all of your charts and make sure that they're all color linked together. As an example, we can just look at this gold color right here. Make sure you put all of your charts to that color. Because what we're going to do next is we're going to change all of the workspaces to that same market. So as an example, every chart that's in gold right now, if I had multiple charts open of gold, I could switch this over to, say, a different market, and that's going to force load all of the different charts to go to the same market. So as an example, what we'll do is we'll just pop a new chart open, and then I'll show you what I mean. All right, so we have that extra chart loaded up, and taking a look at this, right now I've got the scalping time frame up here, and then I've got the wave anchor over here. I've got an 8 JJ bar and a 2 JJ bar. And let's say we have an outdated one, and I need to color link them together to send it to a different market. So we'll choose this one to yellow, and we'll also choose this color link to yellow. And now let's say I use this drop down and I want to switch over to the euro, or I'm updating to a new futures contract month. I'll choose the new month that I just added. We'll just say we did it on the euro. And what that'll do is it'll load the euro first on this one, and because they're both the same color, yellow and yellow, it's going to force load the other chart to match. So now they're both the euro. And that's basically what we mean by color linking them together. Now what you want to do is just unlink those charts just to prevent any future complications. And then just pop open the Control Center one more time, File, Workspace, and save the workspace. You just want to save the workspace just to make sure that all of the changes that you just made actually stay changed. Now, that's really all you need to do to get the contracts to roll over in NinjaTrader. It's a really straightforward process. So overall, thanks for watching. Don't forget to share this with a friend, join the free trial, and register for our nightly newsletter on SchoolofTrade.com. If you have any questions about it, feel free to send an email to School of Trade. Be sure to get back to you as soon as we can. Have a good one. Bye.